Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, June the 29th. The year's 2021. Let's talk trading. The battles versus the war, part 2. And this video is for educational purposes only. Your results differ from mine. Yesterday, Walmall and I talked about battles versus the war, and there's many ways to look at it. Um, I don't know if you've read The Art of War by Sun Tzu, the Chinese general from back in BC, but it's a really good book. It has a lot of good points, and sometimes all you need is one of those points to put you on the right path. So let's take a look at the charts here. Let's go through the charts and kind of think about things in terms of battles, and each trade is a battle. Let's say, make a few definitions. The war, let's call it the session. Now, you could also say maybe the week or the month is the war, and every day is a battle. And then within those battles, you have skirmishes. I like to think of each trade as a battle because you're either going to win or lose that trade or that battle. But at the end of the day, the end of the session, that's the war. Did you win the war? Meaning, do you have more money than you started with? Or did you lose the war? You have less money. Now, some people could say everything's a battle, and it's only when you blow your account that's when you lose the war. There's many different ways, but I like to think of trades as battles and sessions as wars. So, the weekly gap filled on all the pairs. I think Sunday night there was two. I think there was a couple or three Australian pairs that hadn't filled, so there was opportunity there. Now, the weekly open traders, if you're trading away from the open, you definitely had an opportunity to make money here. Right now, if you were short, you're 53 pips below that weekly open. So obviously the week went up and then the week came back down. Or you could have faded the pivot, made money going long in that battle, the pivot battle. Then you see it went up and then came all the way back down. 115 pips off of the weekly high so far. So if you were a rat, red rat, you would have won that battle. Green rats right now, you're in your battle. You're looking to see if price is going to reverse to the upside. Okay, now some more simple horizontal line battles, let's call them. You see here we had the opening range with the low of 38.69. If you took that breakout below the low, you can see there was pips to be made, 44. You'd be up 44 at the moment. Also, you notice the weekly open right here. So if you take that battle away from that weekly open, you see you won that battle too. Yearly open, 184 above, monthly 379 below. So once again, those open lines, good. I used to call, in fact, I think I have an indicator out there somewhere. We call them battle lines, where there's usually going to be a battle at these areas. Previous day's high and low, the current day's open, ditto for a previous weekly high and low and the current week's open, ditto for the month, previous month's high and low, previous month's open. Prices are going to be moving away from those lines. Which direction? You just have to wait and see. Okay, no inside bar trades on the upper time frames, higher time frames, daily, weekly, monthly. On the pound, you can see there's a few other inside bar trades to be had. In fact, somebody was asking me if I had something that, what did they call it? um, the strat or something. They were talking about inside bars, outside bars, and something else. So, but yeah, I definitely do look at the inside bars. They just give me a clue, especially the hourly and 5 minute bars. Okay, on the range. Now, the range is not necessarily a battle, but it can give you an idea of the size of the battle, let's say. In other words, we've only moved 69 pips from high to low, low to high today on the pound. So you can see that the battle's not spread out over a big area as opposed to last week. We had a couple of days where you can see we had hundreds of pips, almost 200 pips of battle area. Okay, showing the um, daily open here, right on top of the weekly open once again. You can see we had the pivot. There was no trigger, really. You faded the pivot, never even got to the buy zone. But you can just trade off the line. But you can see here, it just didn't make it. Didn't even make it, what, +5 or barely +5. So there was, it just hasn't hit that pivot. So if you were fading the pivot right off the open, you would have lost that battle. But you can see here, moving away from the open, taking the trigger at the buy zone. There's one opportunity for profit, second and a third opportunity here. Straight buy zone trades. The rat range really isn't large enough. I think I have it set for 80 in the indicator. But you can definitely still trade the rat. There's enough distance between the zones here. I think there was something I was going to modify on the rat zone. Oh, if you wonder why I have to pull things down, it's because it jumps out on the other monitor sometimes. So I've got two monitors. I'm looking here. No, I think I need to change that, make that an input. Might work on that later today. So each person can decide how big or if the range is large enough or not. I can't remember if it was a default or if maybe it was set to an ATR or something. I'll have to look. But you can see we're 16 pips off of the current daily low. We went through that, the wick zone from the red candle there and the wick zone from the red candle there on that H1 bar. So once it got through those wick zones, it popped above the rat zone, the top of the green rat zone there. So there were pips to be had. And if you notice, I just talked about these wicks. Because usually when I talk about wick zones, I'm talking daily, weekly, monthly for setups, but also just for trading, in battles. That would be considered a tactic. Looking at these wick zones here. So price on this hour came down into the wick zone. Actually, it went up out of it. Then it came back down, broke through it, closed above it. Here, you see, we went down, actually below that wick zone, but came back up. So maybe you would have taken a trade here at the open when the candle turned green. Then you see here, you just follow it up green. Then it came back into this wick zone. And then when it fell right about here, fell back through, just take your money off the table, be happy. And that would be a tactic of how to play the the trade. Now, you can do that anywhere on the chart. Doesn't necessarily have to be in a rat zone, but anywhere on the chart. And whether you use H1 or M5, it doesn't matter. The pattern's the same. Okay, we saw we missed that wick zone. We've already taken out the month. And the weekly wick zone, we took that out the first day. I'm sorry, the weekly pivot we took out the first day. Once again, missed the pivot, so we've got 2 missed pivots this month. On the daily, weekly's taken out, and monthly's taken out. So you can see weekly, you have to go all the way back to April to find a missed pivot right here. Almost took it out last week. Might take it out this week. We'll see what happens. In and out of the wick zone, you can see yesterday was practically a doji. And Walmart DSR type trades here. You can see we opened, we went below the 30. Price turned around. If you didn't take your, 3 pips, I think it was. Yeah, about 3 pips. Then you had to have a little drawdown. Maybe a second touch, third touch. And it broke it hard. So right here, there was opportunity to make 10 or more pips. Then you have a 3, 3, 2 setup on the M5 chart. And if you once again look at the wicks, you can see right here this level, how many times price just created wicks below that level. So maybe you say, okay, that's close enough to the 20. It's at 19.1. So you take that trade here, long at the 20, potential 10 pips. And what happened? It did the exact same thing again. It went up, it stopped there, broke down below a second time, then started coming back. You could take your chances. You'd be going long on a red M5, but it would have paid off. That's hairy hindsight. But, looking left here, you can see it didn't even go lower than any of those wicks. So obviously the buyers pushed price up. And that's how you read things in real time. So you can analyze things from the past, but then you learn, you say, well, what did price do? Okay, it went into the wick, it didn't make a new lower wick, then it turned around. So it's like, okay, in real time, or like right now, it put in one ball, so you've got 3, 2, 1. It broke down through this wick. It came down, it penetrated the 30, but reversed. So now you can see we still have a red candle here on H1. H4 is green. You can see here how price is pushed up from this level. Once, twice, 3 times, and here's the 4th time. So what you do is you look and see, okay, price hasn't closed above the 38 in a while. Then you can see here, price only closed above 36, one time. So somewhere between 38 and 36 would be a nice place to get short, possibly. Top of the hour. So now you can see the Walmart lines are still the same. So you pretty much would trade it the same way. So fellow traders, each trade is a battle. The session is a war. And when you sit down at your terminal, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.